Welcome, ladies and gentlemen. Commodity TV still in Vancouver here, and we are now at the offices in the boardroom of Copper Mountain Mining. And with me here is Gil Clausen, the new CEO, who wants to give us an insight and an update on the company. Welcome.
Thank you. Good to be here.
Great to have you the first time here at Commodity TV. Fantastic. You are the new CEO of Copper Mountain, and I think things are really going well. Maybe you want to first tell us a little bit what you are doing, and then let's dive into 2018, what you have done.
All right. Happy to do that.
Yeah.
First of all, I think it's an interesting, very, very interesting time for Copper Mountain. We're going from basically a single asset producer to a company that has an outstanding organic growth portfolio in front of us. That's actually very exciting and manageable for a company of our size. So we're very excited about what the future holds for Copper Mountain. So I'd love to be able to talk to you about some of that growth and also give you some insights as to what's going to be happening from a forecast basis on our operations.
Okay, let's talk about 2018. I know the financials, of course, are not out because it would be a bit too fast for 21st January.
We're good, but not that good.
I think nobody can do that. But let's talk about the production. I think you were quite happy with the development last year.
Yeah, we had what I would call a very solid year at Copper Mountain, and the operations are running very predictably, very reliably. So we hit right in the middle of our guidance range. We're quite comfortable with that. All in all, a very, very good year. We had a nice tons milled per operating day, which was a target for the company to make sure that we could consistently deliver full production rate through our concentrator, and we're there. So I think from the perspective of that being a target for us, that's put to bed. This is a mine that's steadily producing and producing at a low cost. So yeah, a very good year for us in 2018.
Can you elaborate already on the cost a little bit? Let's say give us an idea if it's still below $2 or are you around that?
I think when you look forward, at Copper Mountain, I think you can, get a sense that we're going to be in the same range as we have been with cash costs and certainly into the future. And that range is generally $1.80 to $2 cash cost range. And the other really nice feature about Copper Mountain is that we really don't have a lot of sustaining capital requirement for this mine. It's developed. We have a very solid production plan, not a lot of major expenditures to be had on our base operations. So, 10 to 15 cents on top of that gets you to our all-in sustaining cost. We're a very comfortable producer.
No, but what is even more important is you make money.
Yes.
That's important. So with that money, you can do lovely things, of course. And there's one property called New Ingerbelle. So what's the development there?
Well, in fact, New Ingerbelle is in our operating license. It is really just another pit for us within our Copper Mountain sequence.
That's what I meant. So it's future production, right?
It is, and it's very low risk growth. Because for two reasons. One, it doesn't have a lot of upfront development cost associated with it. We're really just building a new bridge across the river, which is very low cost. We estimate that to be less than $20 million of capital in order to be able to do that. Very, very manageable. And really, when you look at the development of Ingerbelle, it's like phasing in another pit sequence in our Copper Mountain mine. So there's no change in the mine plan. We don't have to add additional trucks or mining equipment to our fleet. We'll just integrate Ingerbelle into our plan. But the impact of Ingerbelle is extremely significant in a number of ways. One, its stripping ratio is lower than our Copper Mountain mine. So we can reduce our costs. The second thing is it has higher gold grade and higher copper grade. So on a per ton milled through the basis, we'll get more metal yield. We'll be producing more copper and we'll be producing more gold.
More economic, of course.
Exactly, and substantially more gold. We'll go from about 30,000 ounces a year, which we currently do, to more than double that with production from Ingerbelle. So it's an exciting time. We've got an asset that's a really solid copper gold asset, and those byproducts are very valuable. And in fact, when you look further afield to our Australian development in the Mount Isa Inlier, they're copper to gold deposits as well. So we're really developing a solid base copper gold assets.
Absolutely. No, I think it's also a bright future we have, definitely, for sure. And what I like the fact is you are in Canada and Australia, so two of the best jurisdictions mining can have. Right?
People have asked me, what do you think about country risk? And the way I think about Australia and Queensland, and Australia and British Columbia and Canada, from a risk perspective, it kind of feels like a warm, fuzzy blanket, compared to a lot of other.
Absolutely. I would sign that immediately. Yeah. That is right. No, super. Before we come to your Australian venture, I would call it, I think you have put out a lovely guidance for the next years. Maybe you can elaborate a bit on that.
Well, if we talk just about Copper Mountain, we see some real opportunity at Copper Mountain. We gave 3-year guidance just recently, and that's basically what we would consider to be a base case guidance. And that had a significant increase in production. This year in 2019 will be not too dissimilar to what we did in 2018. But we get a tremendous grade increase the following year. As we have been developing our Pit 2 and saddle area of the Copper Mountain pit, we're now getting down into the meat of what we are trying to uncover with that stripping. And the grade profile improves significantly. So we'll move from about 75 to 80 million pounds of copper production to the range of 90 million pounds in that year. And then the year following looks good too. But there's an interesting wrinkle to all this, and that's this quarter we plan to put out a study which integrates Ingerbelle with Copper Mountain. And part of that analysis, we're looking at a very modest investment in terms of increasing the capacity of the concentrator. And if everything works out as we expect, there could be a significant improvement in the production profile and a reduction in the cost profile as a result. But I'll leave that for the results to come out this quarter, but everything is looking very good.
We can talk about that then at PDAC.
How about that? Yeah, we'll follow
that would be
up
good.
then.
Exactly. Okay, so Canada looks fantastic. I think you have set the right strings and pieces really to bring that forward massively, also economically. Now let's come to Altona. You bought the company, Australian company, and the EVA mine and the Cloncurry project. I know the project very well, so I was totally happy that you did that because I think it will be a fantastic future mine. What are the plans now here? What is, let's say, the status of the development, and when do we see the next movement?
Well, as you know, we put out a feasibility study result in the late third quarter, early fourth quarter on the EVA project. We're very excited about that. I mean, that was a very accretive transaction for Copper Mountain to do the merger with Altona. And I would have to say that I'm extremely impressed with the land package that was put together by Altona.
I think it's still 4,000 square kilometers, right?
Yes. Now, what we're really looking at is that whole heart of that Mount Isa inlier, and we're looking for our gold, copper opportunities, copper gold opportunities, I should say. EVA's a perfect example of a very nice project with great IRR, with great net present value at one of the lowest capital intensities that you'll find for any copper development project anywhere in the world. So for $350 million, we can double the size of our production in this company. And I just am so excited about what we have in Australia and our ability to advance projects in Australia and do it in a way that, in a non-dilutive way to our shareholders. These are really financeable projects in low-risk jurisdictions, and we have good partners in place. Our offtake agreement is with Glencore. The concentrates are earmarked to go to Mount Isa. All the infrastructure is very mature from an infrastructure perspective.
That's flat grass country. It's perfect.
Exactly. Ore bodies are on surface. There's no big infrastructure development to do. So it's probably one of the lowest risk development projects that you can have. And I think importantly, we're kind of risk averse on development again. So how we're proposing to advance this project is we do things in a very systematic way. We tend to sort of stage gate the development. We've now gone through feasibility. We've done basic engineering stage. We procured long lead time items that are on a development schedule that doesn't require us to stress our balance sheet in order to maintain a project pipeline that is very near term. But we're not going to move to construction until the project is fully financed and we make a full final production decision when we can tell all our shareholders exactly how it's going to be financed and why they should feel so comfortable with that.
That would be my next question.
Yeah, and in addition,
what are the ideas on that?
In addition, so right now we're moving into the detailed engineering phase. So we're through basic and into detailed, and we will not start construction until we're minimum 80% fully detailed engineered on that, and all of our bid packages are going out lump sum turnkey. So despite the fact that it's low cost, you know, you manage these projects like they're billion-dollar projects.
Absolutely.
And so every element that we're doing in here is going to be designed to take risk out of the process, from financing all the way through execution on the project. And we have the team in place to do it, a very seasoned team.
Absolutely. I mean, you have done it before, right?
Absolutely.
Great. So we talked, as you said, $350 million. I mean, a part of that can come from the cash flow. Let's pray for higher copper prices. Then it's even more easy to do that. But I could imagine maybe you have to issue a little bit of equity and also the rest maybe from the bank, right?
Well, we're not looking at issuing any equity to do this even financing. Better. So we actually have a lot of strings to pull from the financing side, whether they be project related directly, which is the path for EVA, and or whether there be some corporate financings, but we're looking more to the debt side of the equation. And I think what is really shaping up when we look at our consolidated cash flows going forward is that we have a lot of cash that we should be able to deliver to the EVA project and make a project financing for EVA pretty straightforward. And it should be, because it's low cost, it's low risk, and it has high cash flow in the first 3, 4, 5 years. So it's a very fast payback on it.
I think the initial mine life is anyway like 13, 14 years already, but a huge exploration upside.
Absolutely.
So you can do that maybe for, I don't know, 30, 40 years, whatever.
Well, I don't know how long, but we definitely have a lot of targets and we have a lot of resources there.
When I look at it, I would call it, No, I think, to be honest, I mean, with the e-mobility coming up and the copper markets are really going into much higher demand, the supply is not there. We have no major copper mines. Nothing worked out so far. Some little ones, okay. But if we look at the copper market itself, I think copper projects have to be built when the market is down, because then you are ready when the market is going up.
Well, there are several examples of how that has worked out very successfully for companies in the past. And our objective here with the EVA project is to make sure that we don't take on any additional risk, but that we're still timing this market for what we believe, and I think what the world believes, is going to be a bull market for copper over the next 10 years. So you just can't escape the fundamentals of supply demand in this market right now, despite the macro issues of this world and we always had the trade war talks. And maybe it's a little aggressive now, and that uncertainty needs to go, and it's starting to dissipate now. But there's no denying the supply-demand fundamentals for copper and the need for copper in the world. And it takes a long time, as you know, to develop these large projects.
That's right. And what is your take on the timeline? I know you cannot say it exactly on the months, of course, but what is your take? Let's assume your detailed engineering goes very well and you can do fastly then the next steps. I mean, to build the EVA mine is something like 1.5 to 2 years alone?
Yeah,
right?
if we're at the point where we make a decision to actually break ground and actually start the construction on site, we'll have had a couple of things in hand before that. We would have had the project fully engineered, and we would have committed contracts for LSTK package, lump sum turnkey packages on the project. And in addition to that, we'll have our long lead equipment in hand. So from that point where we make a decision to actually construct and commit, we're looking at 18 months to be into production. So that means through construction, through commissioning, and into operation, 18 months. That's pretty fast. So
let's assume 2019 is that you are pulling the trigger, so that would be like 2021. Somewhere you are there.
That's the way it looks, and if the detailed engineering phase takes us into early 2020, that's fine. It's whenever we're ready, and whenever we have the full financing packaged together, we'll move.
Super. Perfect. Then I would say let's move it and we talk next time at PDAC. Then you have the numbers hopefully ready.
Sounds great.
Super. Thank you very much, Gil.
My pleasure. My pleasure.
Thank you. Yeah, ladies and gentlemen, it was Gil Clausen, the CEO of Copper Mountain, and you heard it. A lot of good things are going on here with the company. The production numbers from last year were so far so good. And of course, we do not have the numbers already yet, but we will discuss that at PDAC. But even more important is the future growth potential of the company is really enormous. And I think the guys are doing a great job here. The costs are really under control and they're really taking care on all sides of the business. But you have New Ingerbell coming on stream somewhere here on the one hand, and on the other hand, you have the EVA project, a new mine coming on stream. So I think the next 3 years will be very exciting for this company and they will make a lot of money. And what is even more important, the fundamentals are walking the right way, because with e-mobility really picking up from this year onwards, the copper demand will go through the roof. And we do not have the new mines, but this company has mines already and built new mines, and that's exactly what you want. So check it out. Thanks for watching us. Bye-bye from Vancouver.